This material is made available to you by or on behalf of the University of Melbourne under Section 113P of the Copyright Act 1968. It may be subject to copyright. For more information, visit the University Copyright website.
Hello, it's Ian Williams who is hosting you today. So I'd like to welcome all our guests to this virtual presentation, which will be interesting, hopefully for you, and hopefully we can survive the technology. Firstly, I'd like to acknowledge the Kondamuka people, the traditional owners and the native title holders of the country in which I am present today. I also acknowledge the traditional owners of country in the other locations in which we meet, and I'd like to pay my respects to their elders past, present and emerging. So today we've got three other speakers and myself. So collectively, I would say somewhere between 100 and 150 years of experience in Japan-Australia relations. So you'll have a lot of different perspectives. So if I could introduce our three other speakers. So Elizabeth Massimony at Asia Associates, and also interestingly a Japanese listed company director, which is becoming more and more common. Wendy Holdenson, who's a director of Mitsui Australia and a long-term both in business and with Australia and Japan. And lastly, Andrew Gauci, the head of Japan for Lend-Lease, and if not the most successful Australian company in Japan. So with that, I would like to introduce Makud, who's the CEO of Asialink, whose idea this was to put together a joint presentation from the Australia-Japan Business Cooperation Committee and Asialink Business. It's wonderful to have co-branding and for the two organisations to promote both knowledge and the relationship between Japan and Australia, which is becoming increasingly important. You know, politically, always the economic basis will be there, but a whole range of levels in a very uncertain world that has sort of become more uncertain over the last 6 months, which we'll kind of explore today through the various perspectives of the speakers. Today, there'll be an opportunity to ask questions, but it'll be moderated by Mukund, and there's the Q&A function. You're able to send messages, and then we'll have I think there's about 23 minutes allocated at the end of the session today. So hopefully the speeches sort of stimulate the discussion. Perhaps at this point, I might throw to Mukund to sort of take us through.
Thank you, Ian, for that very warm welcome, and good afternoon to everyone here in Australia, and to those joining from Japan and from across the region. Good afternoon or good morning to you if you're elsewhere in Asia and joining this particular session. It's a great pleasure to collaborate with the Australia-Japan Business Cooperation Committee, a major partner of Asialink Businesses for many, many years, on this particular Asia Market Update series, which is focused on Japan. This is the fourth in our series of country updates that we've done since the start of this year as a result of the impact of COVID-19, which has certainly disrupted the usual patterns of business and had a dramatic impact, I should say, on Australia's trade and investment engagement with major partners in the region. So we held a very successful session on China, then one on India, Indonesia, and now this particular session on Japan, which is very timely as Australia and Japan certainly continue to remain very close allies, with the recent virtual summit by Prime Minister Morrison with former Prime Minister Abe, I should now say, reaffirming that strategic importance in the bilateral relationship. And Japanese and Australian companies have worked together over a long period of time as their economies have been very tightly coupled for many, many, many years from a trade and investment perspective. But they've both been dramatically impacted by COVID-19. And so as businesses in both countries look to identify new sources of growth, the bilateral relationship will certainly become even more important. Japan is Australia's second largest trading partner, and Japanese companies have a very long history of investing in Australia to secure supply chain confidence, know-how, and sales networks, amongst other strategic benefits. Australian companies have had far more limited investments in Japan, with very few Australian companies present on the ground in Japan. And we question, in this current environment, with a great focus on market diversification, if this is actually a missed opportunity for Australian companies. So this seminar will focus on three key things. The first is that we will focus on the change in power, the political change in power in Japan, by looking at that change and also looking at the impact of the pandemic on the Japanese economy and the great changes in geopolitical power that Japan is also having to contend with. Elizabeth Massimony will lead us in terms of the discussion on those topics. We will then look at the major sectors in Australia that are currently attractive to Japanese companies. We'll look at what the latest mergers and acquisition trends are, which are emerging, which involve Japanese companies globally and in particular in Australia. Here we will hear from Ian Williams, who will present the latest research from Herbert Smith Freehills on M&A trends involving Japanese companies. We will then hear from Wendy Holdenson from Mitsui, who will present a great case study of Mitsui, which has been present in Australia all the way back from 1901. We will hear about the breadth of their investments and why Australia is so strategically important to Mitsui. And then finally, last but not least, as Ian has highlighted, arguably the most successful Australian company in Japan is Lend-Lease. And few people have more experience in Japan than Andrew Gauci. So it'll be a great pleasure to hear from Andrew the major factors that have driven Lend-Lease's great success in Japan, and what other Australian companies in this current point in time can learn from a company such as Lend-Lease. So with that, I'd like to warmly welcome our first speaker, Elizabeth Massimony, who's been introduced by Ian, who has tremendous experience in Japan, which includes, as Ian has highlighted, being on the boards of multiple Japanese listed companies, and also, I should highlight, a 25-year career with the Australian Trade Commission, including being Senior Trade Commissioner in Japan. So Liz, over to you. Looking forward to your comments on the change in political power, the impact of the pandemic, and geopolitical issues impacting Japan.
Thank you so much, Mukund, for that very warm welcome, and good afternoon, everybody. I'm here to talk to you about change in Japan and the big picture. I'm hoping that my slide might come up shortly. I need some help. Thank you very much. So, a lot of Japan watchers will probably say to you that change in Japan is very slow in coming, and that often Japan only changes when its back is against the wall, or when there is some other external factor which brings about that radical change. Well, I think perhaps that we have a number of factors coming together in Japan right now which may indeed create a perfect storm for change. Next slide. The first one is politics. Well, as you all know, Mr. Suga became Prime Minister last week. And he's very different to other Japanese prime ministers. He doesn't come from an elite political family. In fact, he's the son of a strawberry farmer. And he's very much a man for the people. And he's worked his way up from the grassroots in politics. And indeed, when he announced his cabinet, he said it would be a cabinet that works for the people. This was met with a very positive response. His cabinet actually got a 75% support rate upon inauguration, and for someone who doesn't really have an over-the-top personality, it's actually the third highest ever. Unsurprisingly, the initial focus will be, of course, on reviving the economy and containing COVID-19. And we can expect, I think, that he will continue with Prime Minister Abe's policies in relation to diplomacy, regional security issues and defence. But on the other hand, what is new is that he has a very strong focus on structural reform and speed in implementing structural reform. And this was the one arrow of Abenomics that the previous administration was never really able to make much progress on. Improving coordination across the bureaucracy, breaking down vested interest, and removing objections to new ideas. I think many of you will remember that in Japan, if it hasn't been done before, nobody really wants to be the first one to do it. In fact, he demonstrated his commitment by establishing a red tape hotline, dial 110, the very next day, which received over 700 calls about problems with trying to get things done in Japan. Another one of his focuses is to improve the digital infrastructure across Japan and take all government services online. If we could have the next slide. The next issue that we need to talk about is power. China is, in fact, as we all know, challenging the world order in so many ways these days, and this is creating a kind of a burning platform. For countries in the neighbourhood, it doesn't mean that they can just sit by and continue with the policies that they had. They really need to think carefully about how to address this. Combined with the presidential election in the United States, Japan wants to seek stability in its relationship with the United States, but it also has to think very carefully about its own position in the region. Recently, Australia has adopted a number of, one could say, controversial policies in relation to its relationship with China. And what this has done is to create an even higher profile for Australia in the minds of Japanese. Many Japanese companies that were really not focused on Australia before, didn't know very much at all about Australia before, read about Australia regularly in the newspaper, and have started to think about Australia's place in the region. Japan is obviously considering its own place in the region, and some of the key factors that may indeed determine how the cards are going to fall will be, the race to develop technology, the need to have a secure region in which everybody can prosper, and finally, the need to build new alliances which are based on values and shared values. In fact, a new innovation alliance is something that has been talked about in recent circles and in at conferences where I've been attending and listening to some of these foremost Japanese commentators. And if we go to the next slide, the final factor is the pandemic, of course. And, I heard that Australia's GDP contracted by 7% and that this was a major impact on the Australian economy. But in fact, over the last quarter in Japan, the contraction was 27.8%. And this is the biggest contraction since the Lehman shock of 2009. And so Japanese companies are really feeling the impact at the moment. They have done a number of things, particularly in terms of mitigating their China risk, which they think is very high in many cases. I'm talking to you now from a chemicals company in Osaka, which has 3 factories in China. So a lot of Japanese companies are looking to diversify their supply chains. I think we'll see greater investment in ASEAN. We'll see greater competition for resources, for partners, for opportunities in ASEAN. And I believe this is another area where Japan will have interest in cooperating with Australia. And we all know that, everything in Japan was done face-to-face up until now. So teleworking was quite a foreign concept, but out of necessity, they've had to embrace it. Calbee is one Japanese company which has completely embraced teleworking to the point where they don't specify what time of day you should work. They don't specify where you should work, as long as you get the work done. And indeed, what this is going to mean is that Japanese companies will have to embrace new methods of management and performance assessment. So it's not about process and more about results. Of course, we all know around the world it's been a boon for online sales and digital industries. But the other thing I think has really changed in Japan is that new ideas have become much more acceptable out of necessity. And people have come up with all sorts of new ideas of not only what to do while they've been in lockdown, but how to create new businesses. And I think this will continue on as we move into the with COVID era. Finally, a couple of points to note is that service robots, things that have already been assuming a prominent role in Japan, have assumed a new role in social distancing, disinfecting, delivering, assisting with medical procedures to mitigate risk on health workers. And finally, seeing as a number of companies have realised that you don't need to be in Tokyo now to work, quite a few of them have decided to relocate their headquarters to regional areas. The last example most recently was very large HR firm Persona relocating to Awaji Island. So I think this will also be a boon for regional revitalisation. So finally, on my final slide, I'd just like to say that, these are a number of forces which coming together as winds of change may in fact create a perfect storm for reform in Japan. Of course, we have to wait and see, but I'm very hopeful. Thank you very much.
Thank you, Liz, for that really short, sharp summary of the implications from the change of power from Prime Minister Abe to Prime Minister Suga, the geopolitical tensions in the region and the impact on Japan and the choices that it now needs to make. And the point about the contraction in the economy actually is a very relevant point as it leads to the next presentation from Ian Williams, as it will be great to hear from you, Ian, on the major trends impacting Japanese company outbound investment and whether this contraction in Japan can potentially lead to even more outbound investment as they look for value overseas. So over to you to speak about some of those trends.
Thank you very much. I'll see if I can manage the technology. Hopefully I can. So there we go. So look, this will be a little bit funny because this was a review when I was a partner at Herbert Smith Freehills, we review on an annual basis the transactions between Australia and Japan. As other speakers have said, that's mainly been Japanese investments in Australia, but also a number of asset recycling transactions where the investment hasn't been successful or not as successful as the kind of required hurdle rate, and it's been divested. So we did that 2017, 18, 19, and in February 2020, we released our report. And so I thought I'd include our heading, which was more good news, more deals, more dollars, more sector diversity. It's just a great news story. And I had an interview with a journalist for The Age and the Sydney Morning Herald. And it was a nice interview, nice profile of what's happening in the relationship. And 30 seconds before the end of the interview, he said, "Oh, by the way, what do you think the impact of coronavirus will be on Japanese investment in Australia?" And off the top of my head, I said, it'll be like a blip on the investment, on the investments from Japan. Well, I couldn't have got it more wrong than within 2 weeks, obviously having lockdowns and both in Australia and in Japan. So this story is kind of a snapshot of where we were at the end of 2019, but I also think it will reflect where we will be probably about halfway through next year. And then there's a period in the middle, which I'll make some comments. So, but just to give it sort of context, there's been an enormous amount of global M&A by, I should say, mergers and acquisitions by Japanese companies. And our impression is there's kind of so much money flowing out, but the statistics show that in fact there were 3,000 Japanese domestic deals in comparison to 826 overseas deals. And the actual total value globally of overseas deals was actually fallen from a peak in 2018. And then he said, well, what about Japanese investment in Australia? And it's normally been about the 6th most popular investment location. But in 2019, it was actually the 2nd highest globally. But there's a slight distortion, and I'll mention that later. The Asahi Group spending $16 billion to acquire Colton United Breweries was a sort of a one-off that you wouldn't expect, and actually put Australia to number 2 globally. But I think it's worth highlighting to say, well, you know, not only are Japanese companies significant investors in Australia, but they're fantastic corporate citizens. Japanese trading houses are amongst the top 10 exporters in coal, iron ore, LNG, wheat, wood chips, salt, and most importantly, amongst the top three of the top 10 Australian corporate taxpayers. And one of those taxpayers will be speaking to us shortly. But when you think of both direct income tax, but also through royalties and in other state and Commonwealth taxes and imposts, stamp duties, etc., enormous contributors. But Australia's been very good, and particularly Itochu, Mitsubishi, and Mitsui, when energy prices and mineral prices have been high, up to 50% of their global profit has actually been generated in Australia. In terms of what happened during 2019, we had 42 announced deals with a deal value of 25.7 billion. But what we found interesting was the 5 kind of mega deals. A lot of mid-cap deals, a number of small-cap deals, but the Asahi Group, Mitsubishi UFJ Trust Bank, making a major acquisition from the Commonwealth Bank of the asset management business, Colonial First State Global Asset, Nippon Paint, purchasing Dulux, Nippon Paper, with the kind of follow-on M&A transaction from one they did originally in 2009, where they bought the Australia Paper business from Paperlinks, and then following on the fibre packaging business. So moving from, I guess, more things that were used in print media to now paper being used in packaging, which actually during COVID-19 has been greatly expanded. And then Sumitomo Chemical, which was a shareholder in New Farm, spending $1.2 billion to buy their South American assets. So let's see if I can get to the, oh, there we go, there's the next one. So why is Australia so attractive? So Australia has a growing population, and of the G20 countries, other than Saudi Arabia, Australia's had the second highest population growth. So we've had a reasonable amount of natural population growth, but in fact, we've had a very, very high rate of skilled migration. And skilled migration is fantastic because it lowers the average age. The immigrants tend to be younger than the average of our domestic population, bring new skills, languages, connections, and actually drive GDP. And so if you're looking to invest in a market with natural population growth that is getting richer, is obviously going to be a key part of your portfolio. Australia does have stable legal and financial systems. Relatively, we have regulatory certainty and low interest. And during 2019, the Australian dollar was weak. But one thing that does really drive this is Australia being a large physical country with a relatively small spread population means that they're kind of natural monopolies or oligopolies. The markets won't support 15 competitors. They do tend to have duopolies, or in a lot of cases, oligopolies of, say, 3, potentially 4. So as a market entry for a major Japanese company to be able to acquire one of the top 3 businesses and already have a footprint is nationally, or particularly in the East Coast, Western Australia, just because of the distance and the smaller population there, tends to be a market by itself. Where investing in Europe or investing in the United States, which is very regionalised, even though they share a common language, Europe's sharing many different cultures and languages, can actually be quite difficult. The pressures from within Japan haven't changed. Obviously, negative interest rates, the demographics of an aging and declining populations, and the Abenomics reform that you assume will sort of continue under the new government is sort of driving microeconomic reform, but there's also more active involvement of non-executive directors, and also a great rise of activist directors, which are making companies look at their returns for shareholders, and often domestically the returns are lower than the potential returns offshore. Japanese companies are well placed for mergers and acquisitions. They've been saving their money since the burst of the bubble in 1992. There's been quite significant criticism for lazy balance sheets not using that cash, but in the COVID-19 environment, having record levels of cash actually turned out to be very prudent. And in relative terms, the yen has strengthened, making those acquisitions overseas relatively cheaper. And Japanese mega banks and other banks such as Nihon and Chikin have continued to support overseas investments. One of the things that we have observed is just how successfully, not in all cases, but in a majority of cases, Japanese-owned businesses have been able to implement a successful post-merger integration or post-acquisition. And I'm just running through sort of examples of recent major M&A transactions, Colonial First State, Bradken being taken over by Hitachi Construction Machinery, Dulux we mentioned. Toll with Japan Post is one that has been much more difficult, and obviously seen in the press with impairments of the value of Japan Post's investment and the continuing relatively poor performance of the toll business. Kirin with Lion Nathan's gone very well. Asahi purchasing the Schweppes business. Nippon Life with the MLC Life business. Daiichi Life with what was known as Tao Life, but now Tao. And Chandler McLeod and Program Management Services being acquired by Recruit and Persol, some of the leading human resources companies in Japan. And the old Paperlinks business, which was called Spices, being acquired by Kokusai Pulp and Paper. And what we're seeing in those companies coming overseas is they're hiring a lot of, particularly mega bank executives who speak good English, have often lived in Australia in the past. It may have been some time ago, but have that kind of international experience, used to dealing with foreign counterparties. And they've been kind of brought in either as part of the M&A team and then following on as part of the post-merger, post-acquisition integration team. And that's been a good and successful development. It doesn't guarantee the business will be able to be managed and be successful, but it's certainly improving the chances of that happening. Oops, sorry, I'm jumping around. Sorry. Someone might have to help me. Sorry, if someone would mind taking control and getting back to my third slide. Maybe one more, I think. Yeah. Oops. Keep going forward. One more. There we go. So, look, I won't dwell on this, but you can just see at each level, the smaller deal, the kind of mid-cap deal, the 100 million to 500 million, which is getting significant size. And then we've got the mega deal, 500 million Australian or more. The number is fairly steadily kind of increasing as a percentage of the overall deal count. And we expect Australia will continue to see that in the kind of post-COVID world. Maybe we can go, if we go to the next slide. So these are the sort of what we're seeing, pre-COVID, and I think what we'll see post-COVID is countries like Australia who have been able to manage, in relative terms, the health issue well, are going to be relatively even more attractive than they were pre-COVID. And a number of the companies who have spoken to, there's a significant risk where you have expanding markets, second world or third world markets, moving quickly from third world to second world or second world to first world, but they don't have the medical infrastructure that's going to allow, if there's a further outbreak, whether that's COVID or some other pandemic. And if they've made a major investment, there's a high risk factor needs to be attributed to that to obtain the sort of internal approvals. I think the way in which Australia has generally managed things will be well thought of and will increase our attractiveness. So what I guess you've seen traditionally until about 10 years ago was Japanese, particularly trading houses, focusing on minerals, energy and food, and starting with Kirin in 2007, acquiring the National Foods and then the Dairy Farmers business, and then following on you saw Asahi acquire Schweppes, and then Kirin taking over Lion Nathan. Sort of going from acquiring minority interests in Australian companies to take those products back to Japan, as I say, mainly minerals, energy and food, to actually participating in the Australian economy. So it's not like the minority joint venture model has gone away. That's continued quite strongly, but we've just got this whole new model, and we're seeing diversification into consumer, business services, housing, life insurance, wealth management, biotechnology. So Australia's image in Japan has kind of had an inflection point where we've been unfortunately sort of focused on Australia being an inquiry or a tourist destination. Everything seeing our products and our R&D is quite sophisticated and being complementary to what they're doing themselves. So we are seeing obviously M&A transactions where money is invested, but as a precursor to that, quite a lot of alliances being pushed together. The two entities, whether that's a university and a Japanese corporate or two corporates coming together, doing collaborative R&D, market development, and then sort of a stepped investment to say, well, yes, there is an opportunity and how we're going to kind of fund that. The understanding of the market and the successful transactions is building a store of knowledge about how to position yourself to give you the best opportunity to be successful. And everyone is excited about renewable energy opportunities. Hydrogen supply chain has had tremendous focus from the Victorian government, the federal government. Japan has its own task force when you're an energy constrained economy like that. And what we'll, I guess, continue to see is the Japanese mega banks funding a lot of that. And in terms of project finance, Bank of Tokyo Mitsubishi, UFJ, Mizuho, and Sumitomo Mitsui Banking Corporation have been tremendous supporters of the renewable energy projects in Australia, and globally are amongst the largest supporters of project finance. What I did mention in the last point there was ESG. So some of you will be familiar with it, of environment, social and governance. And this is becoming a much bigger issue globally, but also we're seeing the rise of Japanese activist investors. And they're making, so rather than just stakeholders being your shareholders, which is this kind of traditional view, stakeholders now is a much wider group of people, including people who are not shareholders, who will campaign negatively, and particularly through social media, can actually drive perceptions and put enormous pressure on boards to respond in a certain way. We are seeing almost the withdrawal by Japanese trading houses from the thermal coal business in Australia, which they have supported since the 1960s. And that's in direct response to shareholders being unhappy about carbon-intensive industries. And so we're seeing a number of divestments and also a reluctance to support gas, oil, anything. So there's a kind of a lens on on investments now. It's not just what's the rate of return likely to be for the risk that's being taken. It's how does this fit within our ESG policy and the way in which the wider community is looking at us. I think that's probably exhausted my time, but I'd be happy to take some questions. And there's quite a detailed paper we've written in English and in Japanese, which is on the Herbert Smith Freehall's website. If you type in Japan, Australia, M&A, you'll be able to access that easily. So thank you.
Ian, thanks so much for sharing the business models, the various deals, including the mega deals, and the major factors that have driven outbound investment from Japan into Australia. And I think it's, again, a fantastic segue to the next presenter, Wendy Holdenson from Mitsui, who you introduced, Ian, previously, to really speak about Mitsui, which has been a long-term investor across a range of sectors in Australia. So Wendy, welcome, and we look forward to hearing your views on the great success that Mitsui has had in investing in Australia.
Well, thank you, Mukund. I'd like to begin by also acknowledging the Gadigal of the Eora Nation, the traditional custodians of the land on which we meet. I pay my respects to their elders, past and present and emerging. Thank you, Ian, for providing such an insightful backdrop for my remarks today. In the lead up to addressing this online seminar, I've been asking myself, how should I describe Mitsui's defining attribute? I could highlight our huge business scope in Australia, with diverse businesses in iron ore, coal, oil and gas, renewable power generation, transportation, machinery, chemicals, steel products, wood chips, salt, food, technology, and even financial services. Or I could emphasise our impact on the economy as Australia's fourth largest exporter, with around $8 billion in total exports annually. Or that we are in the top 10 corporate taxpayers this year, as Ian mentioned. And we've invested more than $15 billion in Australia over the last decade, making Australia the group's largest investment destination globally. Our Australian joint ventures employ over 20,000 people, and on an equity basis, Mitsui employs over 4,600. Finally, though, I decided that if I had to pick one attribute, it would be our attitude toward partnership. From the very beginning, Mitsui knew that we could never achieve our objectives alone. So our strategy has always been to reach out to partners who could help us pursue common business goals. And one of our most long-standing and strongest partnerships has been with Australia. Mitsui's investment in Australia mirrors Japan's investment in Australia. It all began for us in the year of Federation, when the former Mitsui established its first Australian office in Sydney, exporting wool, cotton, wheat, and non-ferrous metals right through to the outbreak of World War II. Mitsui returned here in 1955, and from the early 60s, our investments pioneered Australia's energy and resources sector. Some of Australia's largest export industries were underpinned by our investment. But from the 90s, our joint ventures expanded their export markets to Asian countries such as Korea and Taiwan, and of course, China from this century. Just as Asialink Business and AJBCC are working to build the Asian capabilities of Australian business, Mitsui is doing everything to develop new markets in emerging Asian countries, in effect, helping Australia's economic shift to Asia. We're working to build new business models and make investments in many sectors. For example, premium beef in the food sector. We focus on competitiveness and long-term demand forecasts. Our decisions factor in profitability, alignment with our global strategies for commodities and regions, and risk. We know Australia well. And today, we're challenging ourselves with the question of how can we leverage past successes to enter new growth areas. Digital transformation is creating new value and new businesses for us. An investment we recently made in Australia is in Position Partners, a provider of customised positioning technology solutions for the surveying, civil works, mining and building sectors. It's being used out at the Western Sydney Aerotropolis site, as are many Komatsu vehicles. We have a 40% equity stake in Komatsu Australia too. For Position Partners, our investment opens the door to many opportunities here, but also in Southeast Asia. And the big news is that Position Partners will soon start preparing a smooth, level surface for the street-style circuit on Lombok Island for the Indonesia Grand Prix next year. Let me now touch on energy. Tomorrow's resources progressed with today's investments, and Mitsui has developed and financed a world-class portfolio of energy assets here. In 2018, we took the plunge and shifted from joint venture partner status to an operator with the acquisition of ASX-listed oil and gas explorer, AWE. The driver for this acquisition was access to the Waitsia gas field in WA. It happens to be the country's largest onshore conventional gas discovery in more than 40 years. From another angle, the global move away from fossil fuels towards renewable energy relies heavily on critical minerals. Mitsui is now pursuing opportunities here to diversify our commodity export mix. And it's also exciting to watch us expand our wood pellet exports to Japan for biomass power plants there. But it's hydrogen that's front and centre in today's energy transformation, as Ian mentioned. And hydrogen is another strategic focus for us. Australia's a potential major exporter, with Japan as a key customer. We're already active in New Zealand in this space, where we're partnering with Hiringa Energy to develop the supply chain and market for green hydrogen, including export opportunities and a nationwide refueling network set to go online next year. In closing, I just hope that I've illustrated in these brief remarks just how strong our investment appetite in Australia really is. We know that success is measured not just by how well we run the company commercially, but how well we partner. Our relationship with local partners in Australia is a mirror image of the broader Australia-Japan economic partnership based on complementarity, trust, and goodwill. Thank you. Back to you, Mukund.
Wendy, thank you as always for your exceptional insights. Tremendous success there, and I couldn't agree more that the success of Mitsui in Australia is a mirror image of the success of the bilateral relationship. To build on that, but I think very importantly to also look now from an Australian outbound perspective, which is not often part of many discussions involving Australia and Japan. I think it's fantastic that we have Andrew Gauci with us, who is the head of Lend-Lease in Japan, to speak about the various factors that have led to Lend-Lease's success in Japan and what other Australian companies that in the current environment are starting to again think of market diversification should potentially consider when they think of the Japanese market. Andrew, welcome.
Thanks, Mukund. Just get the slides up. Okay. If you just hand over the control. Got it. It's gone. I'm just waiting for the control to come across, but we haven't got it yet. Okay. No. It does not seem to be working. Oh, okay. I'll. Yeah, we've been in Japan for 32 years, so if you could go back. Anyway, that's fine, just leave it as is. I can't profess to being able to tell you, how you can succeed in Japan. I've seen a lot of examples as the chair of the Australia-New Zealand Chamber of Commerce. I saw a lot of people coming in and out, and a lot fail, very few succeed. I'll give you some examples of how we were able to do what we do. But that's no guarantee for success. So in Japan, we've been here for 32 years. We've got 500 people on the ground. We do real estate, and I'm not able to click forward here. Okay. We do real estate investments. We do building projects, telecommunications projects. All across the country. We're in 9 locations across Japan. But, why are we in Japan? That is the question. Back in 2008, our global CEO decided to pare us back from 33 countries down to 10. But why did Japan get selected? I need someone to click that for me. Sorry, everyone's having difficulties. Wendy, yeah, thank you. So Japan, it doesn't make sense when you look at it on a pure comparison of things like GDP. It was barely growing for over the last 20 years. The population is aging and declining. So, the sluggish productivity growth has made it look, not very attractive compared to the likes of China and India. However, at the same time, you'll find that Japan has been a very stable economy. And the ease of doing business here in terms of the regulatory structure and the infrastructure is far better than some of the other countries that you could be if you're investing into those countries. And then you take Tokyo. Tokyo is a city of 35 million people plus, GDP bigger than most countries, and a massive real estate market for us, but multiple markets for anybody else who wants to be here. If we go next slide. So first lesson that we learned as a business here is that if you're not on the ground, you have no chance. I've seen a lot of people try fly in, fly outs, try and understand the market. They have a fantastic product. It doesn't work if you're not here. What we did is we created a presence. We understood the market. And this is a good example of the building you see there. That's the government of Singapore's investment corporation. Found out there was an international project management company in Japan, and they gave us the gig. And we were then able to build up our business because we were here. We understood the market. Next. So then if you look at Japan, patience and understanding are incredible things that you must have. Let's go to the next slide. In Japan, you'll find that the language and cultural issues are more significant than most other countries. If you do not take the time to understand where what you're trying to sell works, you will fail. The opportunities aren't obvious at the beginning. You need to dig deep and get your relationships in place, understand what is possible for your product, and then you can find that niche. Next. So a good example for us was Isetan Mitsukoshi, one of the big retailers in Japan. It took us 3 years from our first meeting to get our first gig. It took us another 3 years after that to build our business up from one person. We had one person in their organization, understood their weaknesses, understood what they actually needed. And by doing that, we were then put forward proposals that fit their business and expanded ours. So this is one of our big clients. We've got 30 people plus working at Isetan Mitsukoshi. We manage all their property and we do all their network infrastructure as well. Okay. So the next slide, thank you. You'll find that just like Isetan Mitsukoshi, in Japan, there are companies who just don't venture too far outside of Japan. You saw the mergers and acquisitions that Ian mentioned, but their businesses aren't operating so much on the ground. So they're not bringing some of that best knowledge back into the country. So if you've got a good product, you've got a real opportunity, a real niche. In the 90s, we brought project management to Japan. So if you were a landowner and you wanted to build a building, you would give it to a general contractor. Yes, they'd be on time. Yes, it would be quality, but yes, you would pay way overs. It was a black box. Us being here, understanding how much things actually cost, gave our clients visibility. The project you can see in the background was valued at, the forecast was 800 million. We built it for 500 million. It was a niche we found because we were able to patiently and understand what the market required. Okay, next. And then we expanded, and we've basically done most of the high-end retail in Japan. And the next slide will show you that we've also done offices. We've done great, fantastic resorts from Okinawa right through to Hokkaido. So we've actually expanded our business significantly based on being able to find that right niche. Next slide. So the third lesson learned is reputation. And it's absolutely critical in this market. You must deliver on what you promise. If you go to the next slide, we started off in the telecoms business here in 2001, and it was when 3G was just kicking up. And what we found was people were promising the operators that they could do 3,000 sites per month, right? Build these networks out at 3,000 sites per month. We had a good look at it, and we figured you could only do 400 or 500, and that's what we said we could do. But we delivered, and our reputation in the market grew significantly that we could deliver on whatever we promised. If we go to the next slide, we then built our telecommunications business. We've done over 200,000 sites all across Japan because we do deliver on what we say we can deliver, which is different to a lot of companies, and a lot of foreign companies overpromise in this market. You must be able to deliver to get that reputation. Next slide. And then during the March 2011 tsunami, we were selected to actually go and rebuild the SoftBank mobile network in the disaster regions. And again, but they chose us because they trusted us. We built up a track record over 10 years that we could deliver. We could get this up as quick as possible. And that led to more and more work. Our reputation just continued to grow. So if we go next 2 slides. So it was me just after the disaster, and then next slide. And yeah, so we've expanded our base to have SoftBank. We've got Toshiba, KDDI, Samsung, Huawei. These are all clients for us now off the back of being able to build that reputation. Next slide. And final lesson learned is that the building of relationships in this market is absolutely critical. It takes a lot of time and effort, but the rewards can be fantastic. So if you go to the next slide, we actually had based off the relationship here, we built a $400 million JV with SoftBank in the US. And on the next slide, we've done 3 projects, or in the process of doing 3 projects with Mitsubishi Estate in Australia, from Melbourne Quarter to One Sydney Harbour to Circular Quay Tower. All those relationships all built here. So we're able to export it. So it's not just what you can do here. If you build a reputation here, you can then build a relationship and then export back into third countries like we have been able to. Next slide. So what does the future hold? Next slide. Tokyo is, as I said, a fantastic real estate market, one of the most coveted ones. If you go to the next slide, what we're trying to do is actually do a big urban regeneration project. We've targeted a few potential sites, $2 to $3 billion urban regeneration projects in Tokyo, which we think is going to be possible. And if we just go to the next slide, it's not only the partners we've brought to Australia, we've been able to bring our Japanese partners, which we've built relationships in Japan with, into the UK. We've got a relationship with Daiwa House. We're doing a residential project with them in New York. And again, all of that, if you're looking for Japanese capital, yes, it does want to go offshore, but if you've got a base here, you can actually talk to them, understand what they want to do, and direct that flow of capital into your projects, which has been really successful for us. So that was pretty much it from me. I'll go to the next slide. I think that was it. Yes. So you know, from my side, there is a few very, very bright future, but you've got to be here. You've got to build the relationships, and there is a possibility for you to take advantage of the Japanese market. So back to you, McLean.
Andrew, thanks so much for that exceptional presentation. Congratulations on all the great success that Lendlease has had. As we have about 10 minutes for a Q&A now, I would like to come to you, Andrew, and Liz, for your views on the environment in Japan. We've had a couple of questions come in about Australian companies expanding into Japan, and they are really focused on 2 key things. The first is whether the current environment, the impact of the pandemic, the aging population, the long-term structural issues in Japan, will they likely lead to greater openness in Japan to foreign companies, including Australian companies? And then the second link to that, Andrew, noting your point of your experience with the chamber, what would you suggest going beyond, if there's anything beyond the 4 points you've made, which have led to Lendlease's success, that you would say other Australian companies should think of as they look to enter the market? Andrew, you first, and then Liz.
Yeah, I think that the pandemic has actually raised that what's happened in Japan is that they've realised that they're a little bit slow on the digital front. You know, you talk to governments and you can't get a meeting because they haven't got video technology. The medical sector is the same. The reason some of the implementation of the countermeasures was slow is because they weren't actually digitally up to speed. So some of the things we've learned in the medical sector in Japan, all that sort of stuff, you can now come in and say, hey, it worked in our country, this worked. If you are on the ground and can see where the holes are, I think the opportunities post-pandemic are great, are far greater than they've ever been, because people have come to the realization that there is holes in the fabric of how Japan currently operates. And those holes can be filled by other foreign players who had the luxury of being in multiple jurisdictions over the globe. And that knowledge, that know-how can be brought into the country. So I think now is actually a really exciting time. Post-pandemic is going to be a really exciting time where a lot of the know-how that we have will be better accepted in the Japanese market than it has been in the past. Maybe Liz, you have a comment?
Yeah, look, I totally agree with that, Andrew. And I think it comes back to your initial opening comments where you being able to understand where that niche is. And you may have something that works really well in Australia. It could be something that responds to the needs that have been uncovered through COVID-19. But I think the third point to note there is that you need to be able to localise your solution. If you can't localise it and present it in a way to the Japanese where they will understand that this is going to work for them, you know, that's kind of like the last stumbling block. So be very aware that every solution, every product that you might offer, and there could be lots of new opportunities now, still needs localisation, still needs understanding of the overall environment.
Thanks very much, Liz. Very powerful insights there from you and Andrew. And now I would like to go to Wendy and Ian and speak a little bit about the inbound context. And Wendy, if I could perhaps come to you first, and then Ian for your views as well. Obviously, there's tremendous competition for Japanese capital globally. What is it about the Australian market and the business environment in particular, Wendy, that makes Australia attractive for Mitsui Capital?
Yes, Mukund, given that our global network covers 66 countries, it is a complex and competitive process to get investments over the line at Mitsui. However, given the importance of Australia to Mitsui today, we do get very, very strong attention from both our Tokyo head office and our regional Asia Pacific business unit in Singapore, where there is a large investment committee. Australia is seen as a low-risk business environment with stable regulatory settings and legal system, financial systems, and also having a very skilled and capable workforce. And as I said earlier, partnerships are paramount. And the bilateral complementarity with the Australian business community and the Japanese business community is so clear to us all. We've always enjoyed doing business here. So despite COVID taking over, there is very, very promising optimism within our ranks, and we've identified a strong pipeline of opportunities for all our business areas. We have 26 companies in the Mitsui group here, and we are all actively leveraging wherever we can. Ian, perhaps you would like to add.
Oh no, you've covered it very well. But I guess whilst I was working at a law firm, I did an awful lot of foreign investment review board applications. And in my 25 years, there were the occasional delay, the occasional request for a little bit for information, but no Japanese investor ever had their application rejected or modified. So there's, you know, in a kind of world where you need not only friends, but you need long-term friends who know each other well, I think that underlying it all, kind of politics follows economics, or economics follows politics, or they follow each other. It's nice to have that base of trust, and it's something Andrew spoke about. It's all about relationships and trusts, and Australia and Japan have that.
Perfect. Thanks, Ian. And the point on further applications is very, very significant. And the paper that you have published, which is a paper that you regularly update, is one that we will share as part of our post-event communication to all participants, because there's a lot of very important information in that to show over time how Australia has been really competitive in the global landscape. I might end with one question, which combines a couple of questions from participants. And this is a focus more on the language and cultural competency side. There's a question that has come in about seeking job opportunities in Japan. If you've lived and worked there, you are fluent in the language, how hopeful can you be if you're an Australian looking to go into that market? I know, Liz, you've been in that market for many, many, many years. If you're an aspiring graduate today, would you and Andrew be recommending that as a market, and how vibrant is the job market for Australians looking to come into Japan?
Well, I think it's going to be difficult to tell after COVID, but pre-COVID, I definitely say that Japan was a very strong market for people who spoke Japanese. But if you don't speak Japanese, it is quite challenging in many respects. But there are certainly job openings for people who don't have the language, but then they find themselves, I think, being put into boxes where they have less ability to really grow and use their skills. Given that we've had almost a complete shutdown of foreigners being able to enter the market for the last several months, we have to see how the job market for non-Japanese will change and grow, I think, over the next 6 to 12 months. But certainly Japan has been deprived of a certain category of skilled workers that it needs in terms of non-Japanese. So I would certainly recommend investing in your skills.
So I'll just add to Liz's comments. Look, I think it's actually, again, an interesting time. As you've seen from Ian's presentation and how much Mitsui is doing, the Japanese are going offshore more and more, and the investments they're making globally are getting larger, which means that back in head office, someone needs to understand those markets that they're in, and someone needs to be able to translate some of the discussion and issues that are coming out of those countries. They are very much lacking in that skill set. So, I'm not going to name names of organisations, but I had a dinner with some senior Japanese colleagues, and they are desperately looking for, in this case, it was actually Australians who could speak Japanese, who understood their sector. Because they want someone to be here on the ground explaining the bits and pieces of information that are coming back from the country and advising them. Those sort of roles, given the expansion of the Japanese who are looking to diversify their investments across the globe because of the limited growth potentials across the country here, we'll see that there will be a greater demand for people with international experience. So I would highly recommend it, because you'll be rare. And rare means good job opportunities, but also well-paid good job opportunities if that sort of if you're good and you can progress your career.
Thanks, Andrew. Very, very powerful comments, and thanks, Liz, as well. Both of you are shining examples of the great success of living and working in Japan for many prospective graduates. I am conscious of time. There are still a couple more questions that have come in from the audience, but what I'm going to do is I'm going to take them offline and we will respond to your questions. There are 3 in particular. They're quite specific, so we will come back to you with responses. There have also been a couple of requests for the slides. What we will do is we will speak with our speakers here and we will see what we can provide you, but certainly we'll be looking to make this webinar, which is being recorded, available. So you should have this moving forward. With that, I'd like to invite Ian Williams to offer a formal close for this event.
Thanks very much. Well, firstly, thank you to Asialink for offering the AJBCC as the leading business organisation between the two countries. It's traditionally has focused on, let's say, the bigger end of town, but bigger end of town can sometimes become a smaller end of town, and new companies become medium-sized companies become large companies. So it's the kind of concept of stagnant membership has changed a lot. And so the idea of sort of jointly promoting stuff is terrific. But look, I learned quite a lot today, and bringing those perspectives and not having the chance to kind of visit every 2 or 3 months, you just realise how quickly things change. And so hearing from Elizabeth and was really interesting in the way the politics and power and pandemic, and then hearing Andrew's experience of really a how-to of, you know, Lendlease has only been there for 32 years. And people now say, well, weren't Mitsui geniuses for investing in the iron ore projects in Western Australia? And I guess it started about 1962 was first ore. But they forget the first 20 years was a lot of carried forward tax losses. And, you know, if Mitsui hadn't continued, they wouldn't enjoy the benefits they are from those investments. So it's a story of, I think, you know, on the ground, absolutely. It's about, you know, trust, reputation, but understanding the customer, understanding the market. And it's no different from someone entering the Australian market, but for some reason people don't seem to appreciate the same principles apply wherever you're doing. But I think this next sort of 18 months to 3 years is a really exciting time for Japan-Australia investment and trade and opportunity and collaboration and cooperation going both ways, because change always brings uncertainty, but uncertainty brings opportunity because people are open to new ideas, a way of doing things, rather than we tried that, it doesn't work, or we've always done it in this particular way. And I think the pandemic will bring the introduction of technology forward. It used to be we looked at technology companies, but every company has an opportunity to introduce technology to increase their relative competitiveness. You know, and frankly, companies that don't do that or, you know, manage their assets are going to be at a massive competitive disadvantage. So I'd like to thank my three colleagues today for their time in putting together some really thoughtful slides, and I hope you out there in Zoom land. I think there was a couple of hundred people registered today, which is it's a nice reflection of the interest that people still have in the Australia-Japan continue to have in the Australia-Japan relationship. So on behalf of the four speakers, the AJBCC, and our hosts at Asialink, thank you very much.